Edition of Under the Rug. It's Sunday, the 24th of March. And today's video, I'm going to be talking about the breakout in the gold price to all-time highs and what this implies about the outlook for global financial markets and also just everyday living around the world. So just a disclaimer, all of this is general advice, nothing specific, no personal financial advice is intended here. So why is the price action in gold significant? Well, gold represents a threat to the global elite banking system, as well as their control over the world financial monetary system. So under a gold standard, where a country's currency is linked to the value of gold directly, governments are restricted from creating too much inflation and debt. So it creates a system of checks and balances. Whereas under a fiat monetary system, there is no restriction. Governments can spend well beyond their means, which ultimately results in high inflation and a decline in general living standards for the general population. And this is essentially where we are today, with some of the highest cost of living pressure that we've seen in a generation. And what makes fiat money, which is essentially backed by nothing, so deceitful is the ability of central banks to literally create it out of thin air and then charge interest on this money to the general population, right? Which is essentially a way of enslaving people through debt. In the case of gold, it's been money for over 5,000 years, and it's survived every financial crisis since the dawn of time. On the other hand, every form of fiat currency has failed 100% of the time. That's money which has been created by man. So I'm just going to share my screen here. But some of the extreme examples of currency failures that we've seen in modern history include the German paper mark here in 1923. You got the Hungarian pengo in 46, the Yugoslav dinar, the Zimbabwean dollar, the Venezuelan bolivar, and the Turkish lira. So now I'm going to read directly from an article which is published by a precious metal site called Vaulted. And the article is titled, "Why Do Fiat Currencies Fail?" It goes into some interesting history about fiat currency disasters of the last century. So starting with the German paper mark, after World War I, the German government printed massive quantities of the paper mark to pay for war debts and cover the cost of reparations. This led to a sharp increase in the money supply, which in turn caused extreme hyperinflation and widespread poverty. From August of 1922 to December of 1923, consumer prices in Germany doubled on average every 3.7 days. With the Hungarian pengo in 1946, Hungary experienced the worst hyperinflation ever recorded. World War II destroyed much of the nation's infrastructure, forcing the government to excessively print money and take on high levels of public debt. This expansionary monetary policy soon led to economic collapse. To keep up with hyperinflation, Hungary's government printed bills worth 100 quintillion pengo. Hungary soon introduced a new currency, the forint, which was directly convertible to gold. So just to let you know, 100 quintillion is 100 with 18 zeros behind it. With respect to the Yugoslav dinar, the dinar plummeted in value in the mid-1990s, particularly during the Croatian War of Independence and the Bosnian War. The government cranked up the money printer to fund military operations and to pay for federal expenses, leading to an oversupply of the currency. According to Hank Kruse' World Hyperinflation Table, hyperinflation peaked at 313 million% in January of 1994. And with the Zimbabwean dollar in the early 2000s, the Zimbabwean government expanded the money supply to fund various spending programs such as land reform and economic development. From March 2007 to November of 2008, the nation experienced an equivalent daily inflation rate of 98%, reducing the Zimbabwean dollar to worthless pieces of paper. So I'll just stop the share there. So the common theme with these currencies that have failed was an accumulation of too much debt and by governments who resort to printing currency to recklessly pay off these debts. And it's often been said that the US dollar has many advantages which protect it from hyperinflation, namely the fact that other countries use it as a means of settlement and trade. However, as I've been talking about in recent videos, these privileges are quickly being eroded with the emergence of the BRICS economies and that coalition of countries, which is standing up to US hegemony, as well as the petrodollar system, which seems to be in its final stages as well. And just coming to the debt clock, share this again. So what is particularly alarming about the US government situation is the exponential increase in US government debt, which now stands at over $34.5 trillion here, as you can see my cursor moving over this area of the screen. So this is the US debt clock. It's a legitimate site which shows all the official numbers for the US government debt position. And that $34.5 trillion, it doesn't include all of the unfunded liabilities, which includes all the government pensions, which are due to be paid in the future, which is now standing at close to $214 trillion in unfunded liabilities. But it is a very concerning picture now for the US dollar, because if you have a look at the deficit spending, so it's currently at around $2 trillion a year, 1.937 trillion. So the government is spending almost $2 trillion more than what it's bringing in tax revenue. And the interest on this debt is now getting up close to $1 trillion per year. So just coming back to gold. So after making a high of just under $2,100 in June of 2020, you can see here that gold has been trading largely sideways. I'm going to share my screen. However, gold has finally broken out through to new all-time highs, as you can see here. So this is likely to signify the next phase of the bull market and much higher prices ahead for the gold markets. But more importantly, the breakout in gold it's a clear evidence that there's a loss of confidence in and faith also in the US dollar and the US government, which is set to continue as more and more countries are dumping the US dollar and US government bonds, because the US government has weaponized its currency, which we can see what it's done in the Russia and Ukraine conflict by seizing Russia's US dollar reserves, and is treating the dollar like monopoly money now. So it's not only the gold price in US dollars that's climbing to new highs. The gold is trending higher in pretty much every fiat currency around the world. You can see here that gold priced in Australian dollars, in Aussie dollars, it's up about 17% over the last 12 months, but it's trending from very clearly the bottom left of the page to the upper right. So it's a nice upward trend. Similarly, gold in Canadian currency, it's up about 10% in the last 12 months. Gold in Japanese yen is also surging. It's up over 23% in the last 12 months. Also in euros, you can see that in euros, gold's up about 16%. And in British pounds, it's up almost 17% for the last 12 months. So I could keep going with showing all these currencies breaking out. Sorry, in all these gold prices breaking out in different currencies of the world. But the point to understand here is that all fiat currencies around the world are failing when measured in terms of gold. And the consequence of all this debt and all this money printing by many central banks around the world, not only the United States government and their central bank, the Fed Reserve. So what we're seeing is a destruction and a debasement of all currencies around the world. And it is clearly resulting in a reduction in the purchasing power of that money and a reduction in living standards for everyone. So what does gold represent? Owning gold is a form of insurance for your wealth. It's always survived every monetary crisis throughout history. There's no counterparty risk when owning gold. And if we do have an escalation of global war, and also bank failures, more people are going to want to own gold as a form of protection for their wealth. So with the price of gold climbing, it's a fair question to ask also, who's actually buying it and where is this demand coming from? So what we can see here, I'll share my screen here again. What we can see here is, according to the World Gold Council, the central banks have been have done net gold purchases totaling 1,037 tons in 2023. And that's the second straight year central banks added more than 1,000 tons to their total reserves. In fact, the last 2 years has seen the highest level of gold purchases by central banks globally, going back to the 1950s. So clearly, the central banks, and China was the biggest buyer of gold in 2023. So it's not the public at large that's buying gold, but it's the central banks, it's the most powerful institutions on the planet who are buying the precious metals. And clearly, they see another financial crisis on the horizon. They're getting ready for something big to happen. And I don't think it's going to be long before the public does get on board and starts, taking the gold price momentum even higher from current levels. However, with the gold price already over $2,000 an ounce in US dollar terms, the real opportunity, I think, it's in the silver, which has lagged the gold price. So if you look here at the price chart of silver, this is over a 5-year time frame. So technically, silver looks poised to surge higher from this current technical resistance. So the key level for silver right now is at $26 an ounce. You can see here that for the last sort of 3 odd years, every time silver's gotten up to that $26 level, it's been smashed down. And look, there is a lot of manipulation happening in the silver price by the um, major bank institutions. For example, JP Morgan, about 18 months ago, got fined close to $900 million for tampering with the gold, sorry, the silver price. So clearly there is a lot of manipulation happening in this space, but at some point we're going to see the silver price break out of this very confined and this channel here, which is gaining a lot of momentum for a breakout. And if you look at the silver to gold ratio, it suggests that silver is still incredibly cheap compared to the price of gold. And the retail investors, they're going to be targeting silver over gold just due to its affordable price range. So time will tell whether silver will be dragged higher by the surging gold price, but history does suggest that silver always plays catch up to gold, and I can't see in this case why anything would be any different this time. And finally, if we see interest rate cuts this year, in my view, this is just going to be fuel on the inflationary fire, and it's going to add even more momentum to the silver and the gold prices going forward. And last week, the Swiss central bank, they cut interest rates, which surprised many market commentators. So it's the first of the major central banks to cut interest rates, and it's a sign that more central banks are going to follow with interest rate cuts in 2024. So I think this is a sign that the banking system is in big trouble, and with bond yields persistently high at current rates, they're going to be cutting interest rates to try to save the banking system. So interest rates are going to be cut this year, but it's not a sign of a healthy economy, or it's not a sign that inflation is being conquered here. Rather, it's a sign that there's big problems in the global system, and it's going to be interesting going forward. But I really appreciate your listening today, and I hope that you found this content interesting. If you can support the channel, please subscribe and like. And yeah, thank you for your time. Goodbye.